everyone. We'll start the session in another 30 seconds, 30, 40 seconds. There are still people joining in. Is my voice audible and clear? And can you see the screen as well? Please comment in the chat box. Okay, thanks. I will start in another 20 seconds. Still people are joining in. I think we are good to go. Good morning, everyone. Welcome to another session of Pre-Build with William O'Neill India. This is Rajasekhar Kongari, Equity Research Analyst at MarketSmith India. I hope everyone had a good long weekend. This is very unusual for Indian markets closed for 4 consecutive days. I hope you all are refreshed and ready to trade. Talking about Nifty's current market status, we are in a confirmed uptrend after Nifty reclaimed its 200 DMA. We have changed the market status to confirmed uptrend on March 17th. Since then, market had a good consolidation above its 200 DMA for a week. Then it had a good up move. However, in the last 2 weeks, we have been seeing a profit booking across the scripts, across the sectors as well. Hence, the Nifty retraced towards 20 and DMA. However, there have been many days where Nifty closed more than 0.2% lower. However, taking a volume into consideration, there were only 2 sessions where Nifty action was qualified as a distribution day. This is a good sign, whereas other global peers are having high distribution day count. In this sense, Indian market is still resilient enough in the short to middle term. And talking about what happened during the long weekend, US market closed lower. As you can see, tech heavyweight Nasdaq closed 2% lower, S&P 0.2% lower, Dow closed with a minor loss of 0.3%. The major reasons for these losses have been the rising inflations, which are reaching 30, 40-year high levels in the last 2 to 3 months. To this news, treasury bond yields have been rising for the last 2 months as well. It had hit 2.86%. This is the highest level in the last 3 years. Hence, most of the money from the risk assets, like which are equity assets, have been flowing to safe haven assets like treasuries. That is the reason selling is seen in the equity markets. As you can see here, US market is in uptrend under pressure, whereas we are in still uptrend because S&P has a distribution day count of 5 and Nasdaq has a distribution day count of 4. Both these indices are trading below their key moving averages. Hence, we have changed the market status to uptrend under pressure in US. One more detrimental factor is the Brent crude trading at $113 per barrel. This is a detrimental to Indian economy as well because we are a crude importer. Our finances will get hit and trade deficit is going to expand because of this rising crude oil prices, which have been the case in the last 2 months because of rising geopolitical tensions across Russia and Ukraine. Also, in this week, US major companies like Bank of America, Netflix, Tesla are reporting. To this news, US futures are currently trading lower around 100 to 200 points. Talking about how the Indian markets are going to open, Asian markets have also trading with deep cuts, Nikkei 0.2% lower, whereas Kospi and Shanghai have been trading 0.2 and 0.5% respectively at this current point. And HS Nifty also trading around 200 points lower compared to the Wednesday's close of 17,475. So we can expect a gap down opening in the Indian market as well, majorly because of HDFC Bank, which has a good market cap and good weightage in the Nifty, has underperformed or its results have missed the street estimates. HDFC ADR was down 1% in the US market, and we can expect similar lines opening for the HDFC and the Indian market as well. Silver lining is that asset quality has improved on HDFC Bank, which is a good sign for the bank and other banking peers as well. Next, government has amended FEMA rules to allow 25% FDI in LIC. As we all know, LIC is about to list in the Indian markets. Government is planning to sell about 5% stake in the company. It is expected to raise around 65 to 70,000 crores at the current market valuation. Also, Maruti Suzuki had a new CEO and he talked to the press during the weekend. He's very bullish on the company and he said company is about to reclaim the 50% market share in the Indian markets, which has been decreasing in the last 2 years. He also mentioned about the SUV segment, which will be the main focus in Indian market. And talking about the electronic vehicle launch, companies are planning to launch by 2025. And talking about stocks of interest, VIP Industries is our buy watch list stock. It has broken out recently. However, we did not add on that particular day. However, but in the last 10 days, stock has been in the profit booking zone, and you can see the volumes have been on the lower level. It has retraced towards its ideal buy zone. If the stock trades higher and volume comes in, we might add it to our model portfolio. The reason we like the stock is there are many factors. Fundamental and technical ratings are strong in this stock. You can see the number of funds have been increasing consistently, which indicates institutions are still bullish on the stock. These are a couple of reasons why we would like to add the stock to our model portfolio. Next is Solara Industries, which is also our buy watch list stock. You can see here the stock after breaking out, it is trading in its ideal buy zone range. However, the volume has been on the lower side. Hence, we have not getting a proper buy point to add it to our model portfolio. In this case, if the volume kicks in and the stock trades higher zone, we might add it to our model portfolio as well. The story is similar. Institutional sponsorship has been rising quarter-on-quarter basis. Ratings have also been top-notch. We have read into the company's transcripts as well. They have been very bullish in the next in the coming quarters and 2 to 3 years as well. Thanks for joining our pre-bell. We hope to see you again in the pre-bell and tomorrow's pre-bell session as well. Thanks, everyone.